There are three big trends for this spring's housing market. One, supply continues to build. This is measurable in both the total unsold inventory and in the number of new listings each week. Because each week we have 8 to 15% more sellers than last year, the total inventory will continue to build unless and until demand shifts dramatically, which would require notably lower mortgage rates, and those do not seem imminent. The weekly pending home sales rate is above last year at this time. Now, there are just slightly more home sales happening now than last year at this time. So there are more sellers each week and there are more sales, but the supply side is growing faster than demand. Three, home price pressures continue to be lower. Supply is up nearly to the pre pandemic levels across the country, and demand is still weak. That implies price pressures. While home prices are still just a little bit higher than last year at this time, the trend is underway and that prices could shift negative very soon. So there are lots of markets around the country where home prices are already below last year at this time, but the national average has remained positive so far. It's getting close. We have the added wrinkle this year of a rapidly slowing economy. As the year progresses, we'll see whether lower mortgage rates, assuming we get them, can offset consumer fears about recessions, tariffs, job security. So the bad vibes on the economy have not really been a factor for the US homebuyer for 15 years. Right now, employment is weakening, but it's not bad yet. There's a lot of economic data showing slowing, but we ended the year with a lot of economic strength. So it pays to keep watching the data closely to see how the home buyers react from here. The takeaway here is that in the last few years, the headlines have been saying home sales are down, but prices keep climbing. But that may very soon switch to home sales are finally climbing again as home prices dip. So let's take a look at the data and we'll see the specifics. I'm Mike Simonsen. I'm the founder of Altos Research here at HousingWire. We track the entire US housing market every week so that you get the insights far before you see it in the traditional channels. If you need to communicate about this housing market, go to altosresearch.com to get your local data for your local market today. Okay, let's start with home prices today. This is a view that I don't share very often in these weekly videos, but it's very useful right now. So, this is looking at prices of all the pending home sales and how that median price has changed from a year prior. Annual home price appreciation. So, there are 358,000 single family homes in contract right now, and they are priced only 50 basis points above last year at this time. So this is showing year over year price change. And you can see that coming out of the pandemic at the left end of the chart in 22, home prices were up by 10, 12, 15% over the previous year. That pace slowed dramatically in 2022 and turned negative in January 2023. As demand recovered a bit in 23, we moved into 2 years basically where home sales were down, but home prices were up. Home prices were up 4 to 6% in each of the last 2 years. But now we're at the right end of the chart, and the line sure looks like it's heading negative. Pending home sales prices are still 0.5% higher than they were last year at the end of March. So positive nationally, but the weekly moves are stepping lower as supply builds and demand doesn't. By the way, in the Housing Wire Altos rental data, we've observed rents on single family houses are also pushing lower, and rents have turned negative compared to last year. So rents and home prices always tend to move together, and together right now they're both moving lower. So in this week's pending home sales, the median price was $395,000. That's up a smidge from last week and remains just a hair above this point in 2024. So the purple line here is climbing a little bit as you'd expect for the spring, but it's barely above last year's blue line. One thing to keep in mind about home prices that this chart illustrates very well for us. The data does not show a home price crash. Usually, when I talk about negative home price pressures, the comment sections are filled with people declaring a crash is underway. But a crash, at least in the data, is not underway. This is more like a multi-year ordeal than a fast crash. In 2022, for example, we could see very specific, very rapid moments of home prices dropping. I've highlighted those in the green line here from 2022. Home prices actually dropped in June and again September 22. That pattern is not happening right now. If you've paid attention to my work, you know that I don't see a crash coming, and that for 8 or 10 years, the housing crash people have declared a crash is upon us. I've been of the view that multiple years at flat or slightly down home prices is a much more likely scenario than a crash. And it feels like we're in that multi year scenario right now with weak home price trends. Not a crash, but ample supply that keeps a cap on home prices rising. So, to wrap up the analysis of home prices, let's look forward. 35% of the homes on the market now have taken a price cut from the original list price. So that's an increase of 70 basis points for the week. Last year, there were fewer than 32% of the market had taken a price cut, and the rate was climbing at a slower pace than it is now. Price reductions are moving pretty quickly each week now, so this continues to be a bearish leading indicator for future sales prices. And we've been talking about this for several months now. This chart has each year's price reductions curve. 2025 has more homes on the market now with price cuts than any March in the last decade. Price reductions are a very fast signal of demand shifts. And you can see that actually in last year's blue line after September. September 2024 was the moment when mortgage rates hit their low point for the year. That spurred demand enough that the price cuts plateaued and then started easing down in the fourth quarter. You can see that blue line here, 2024, behaved very differently from the 22 line, the green line in the fall of 22, when the market was deteriorating rapidly. Therefore, the takeaway from the recent price reductions data is that we've seen home prices generally negative pressure for this year. This true of active listings, of the pending home sales. It's true of the leading indicators, right, like this, for future home sales prices. So price cuts are generally accelerating. So that implies home sales prices in the next few months will remain under pressure. So that's the pricing data. Price pressures are increasing, but on the transactions, the total number of sales happening, it sure looks like home sales are finally ticking above last year's pace. We could very soon be seeing headlines: home sales are up, but prices are down. So, can the pace hold up? In 2024, home sales slowed in the second quarter due to spiking mortgage rates. If we're lucky this year, we get the opposite dynamic happen. So, April, May, June of this year, maybe falling mortgage rates and slightly improving home sales. There were just over 69,000 newly pending home sales this week for single family homes around the US. That's up about 70 basis points from last week and is just about unchanged from the same week a year ago. Home sales generally climb each week during the spring, so that should continue through May. If we're lucky, we'll hit 80,000 sales in a week coming in this spring. Last year, Easter was early last year, so you could see the dip in the blue line here in the sales number, which would have been the beginning of April. This year, Easter's later in April, so we'll have a growth week next week when the pending home sales come in. For most of the first quarter, sales were running below last year at this time. As of right now, the second quarter, April, May, June, are set up to show slight sales growth over 2024, a little bit of growth. So there are two competing forces with these home sales numbers in the coming quarter, though, and I mentioned them. So on the positive side, as I mentioned, we have the momentum. Sales are ticking up slightly. And I think that's because mortgage rates are off their peak and buyers are tiptoeing back into the market. Rates are not really coming down, but they've been stable at about 6.6%. And it seems like stable mortgage rates are more likely to help sales volume than a jump in the other direction and hurt us in Q2. On the other hand, the economy is definitely slowing. Massive new taxes proposed. Maybe they go into effect this week. There are these negative macro forces the housing market hasn't had in 15 years. So even if rates dip, will home buyers respond if they're worried about their income? So we're not in recession. I don't have an answer to the question. We don't yet know how the taxes will be implemented or how long they'll be around. But what I'm watching for is whether this nascent momentum of sales growth over last year keeps going into the second quarter. As of right now, the next couple of weeks look like it will keep going. There's a ton of chaos in federal policy, so the big risk that's looming over the housing market could derail any growth. So, on to the housing supply data. There are now 676,000 single family homes unsold on the market. That's up 1.1% for the week and is now 30.6% greater than a year ago. Supply is building. In this chart, each line is a year. I've highlighted this year in purple, last year is blue, and the 2019 curve in green. 2019 started a bit slow. The economy was slowing actually from the last trade war, and the Fed had just started cutting rates to try to keep the economy out of recession at the time. By the end of 2019, interest rates were down, so housing demand was up. Inventory started falling pretty quickly in the second half of 2019. That green line at the right end of the chart was sloping down each week. So we ended 2019 with 782,000 single family homes unsold on the market. That's right about where we're going to end 2025 with also. So assuming the current trends continue, we'll see this year's curve, the purple line, will finish at about the 2019 levels. If mortgage rates fall enough to stimulate demand, for example, if rates fall to 6% or even duck below that, then I expect demand to spur faster than supply. So we'd finish the year closer to 24 than 2019. And while there's no sign yet of mortgage rates getting low enough to really move the needle on demand, there's still 9 months in the year and a ton of uncertainty. So who knows? Rates could get there. So the takeaway from the inventory chart is that lower rates create less inventory. Higher rates lead to more inventory. And the 2025 path is one of higher inventory. There has not been any shift to slowing down the supply growth yet. So, more homes for sale for the rest of the year. The supply side of the housing market equation includes all those homes on the market, the active inventory, and it also includes the new listings each week. It's like, how full is the reservoir and how much is it raining? So for 3 years, the reservoir has been slowly filling, but it hasn't been raining very hard. So now we're out of the drought, but because it hasn't been raining very hard, the dam isn't bursting. Well, it's raining a bit harder now. It's not a downpour, but it is raining. So nearly every week for like 5 years in a row, so maybe 200 of these weekly columns and videos, I've said that until we see the new listings volume climb, we're not going to shift out of the tight supply reality. So, well, new listings are climbing. So for years, we've been watching this very low number. It's now starting to sure seems like we're transitioning out of the housing supply assumptions of the last 5 years and into a new set of assumptions going forward. This week, there were 68,000 new listings unsold around the country, single family homes. There's a little dip for the week by a couple percent, but it's still 13% more new listings unsold than the same week a year ago, 13%. There are fewer immediate sales too. So we counted 14,000 new listings that are already in contract. So overall, maybe 6% more sellers coming to market this year at the end of March than last year. So 5, 10, 15% more sellers each week now. So it's raining 5 to 10% harder each week, filling up the reservoir. The current rate of new listings is 24% higher than in March of 23. So in this chart, we have the weekly new listings rate. The purple line is this year. It's closer to the gray lines at the top of the chart from the previous years than it is to the lines at the bottom of the chart from the last 5 years. More sellers now. The rate isn't skyrocketing. It's not above previous years, but it continues to add supply each week. So we don't have 100,000 new listings each week because the vast majority of Americans are very secure in their homes with their cheap mortgages. This isn't 2008 when the opposite was true. At that time, there's a rush of sellers to get out of very bad mortgages with no equity and relatively high rates that were adjusting higher. Now we are locked into ultra low rates, so do not interpret this shift as a crash. But recognize, as I mentioned here, supply is growing and will continue to grow. Home price pressures are on and will continue to be on until something changes with buyer demand. So that's why the three big trends right now are increasing supply that enables more sales, but not a lot, and therefore continued downward pressure on prices. We could, in the next few months, be saying home sales are up as home prices are down. Stay tuned for that. Okay, that's all the data we have time for today. If you need to communicate about this housing market with potential buyers and sellers, you should join us at Altos Research. You can get a free account with your local data. Go to altosresearch.com, run a free report. Let's get started today.